If you're able to understand market structure in your trading, you're going to become a profitable trader. Market structure is the key to every single trading system, in my opinion, because your price is either doing one of three things: you're either trending bullish, trending bearish, or you're in a consolidation period. In these two cases, we've got a bullish trend here and a bearish trend. Now, what is a bullish trend? A bullish trend is when you form a high, a low, and then you form a high indicated by price is breaking above this previous high. So you form a high, pull back to form a higher low. In a bearish trend, you got a lower high, lower low, lower high, lower low. Now there's multiple ways to get in. If you're a breakout trader, you can look to get in as you start to get candle closures above that previous high, anticipating price to form a new high. If you're a break and retest trader, supply and demand trader, you'll be looking to get in either down here as price pulls back to retest that previous high, understanding that that can turn into a level of support, and then you'll be looking for price to continue to the upside. And it's the exact same thing with the bearish trend. If you're a breakout trader, you'll be looking to get in as you start to break below that area, and then you'll be anticipating that to form a lower low. And if you're a break and retest supply and demand trader, you'll be looking to get in as price pulls back to that area, which is kind of, in my opinion, could be a stronger confirmation that price does want to continue to the downside. Again, you can also come up to these areas up here and still technically be bearish, and in this case come down to this area and still be technically bullish. So if you can actually understand areas of supply and demand, support and resistance, it's going to allow you to have a logical area of stopless placement. So say for example, if I was to get in a trade here, my stops would go down here, because I understand that price can pull back into this area and still technically be bullish. So that's why I would have my stops. Same thing with the bearish trend. If I got in some sells here, my stops would be above that previous lower high, understanding that price can pull back all the way into this area up here. Price can pull all the way back into here and still be bearish to continue to the downside. But once you start to break above this area, that's when you may see price continue to push to the upside. And once you start to break below this area, that's when you may see price continue to push to the downside.